Go on. Oh, wait a minute.
Good evening, ladies and gentlemen. I'd like to welcome you to today's investor briefing. I'm your host, Dan Theork, Senior Vice President of Investment Banking. I'm excited to welcome my co-host, Percival Braham, Investment Advisor at Mayberry Investments Limited, who will be participating remotely in today's discussion. Welcome, PJ. In studio with us is our featured guest for this evening, Mr. Christopher Clark, CEO of Caribbean Cream Limited, affectionately called CREMI. Today we'll be taking you through a review of our top 3 stocks, namely CREMI, of course, Lumber Depot, and JMMB. Encourage our viewers to post their questions on social media and remember to tag us with the hashtag #MILInvestorForum. If you enjoy this program, be sure to like, share, and subscribe to our YouTube channel. So we'll be kicking things off with our review of CREMI. So, guys, if you'd put that up on the screen for me, I'd like to walk you guys through my analysis of CREMI. First of all, I want to remind you that when we first featured this company back in February this year, the stock price was $4.95. And here we are approximately 5 months later, and that price is up 30% to $6.42. At $6.42, it's trading at a PE of 19 times in a junior market where the average PE ratio is actually 21 times. And they have a trailing EPS of 34 cents and whopping earnings of $127 million. We'll definitely be asking Chris, how did he do this? Moving on to the next slide, I'd like to take a quick look at what's happened in the last quarter. Their quarter to May, we'll see that they grew their sales by 28%. To $549 million. That annualizes to $2.1 billion, folks, if you can keep up that run rate, which is even better than its full year's revenues of $1.9 billion. So into the big league here now, billions of dollars of sales. That 28% growth in revenues translated into a 50% growth in gross profit and a 100%, whopping 100% growth in the profit before tax of $62 million. Next slide. This gives you a feel for the numbers in a graphical format, again demonstrating $548 million in sales, $208 million of gross profit, and $54 million in net profit. So a net profit margin of about 10%, which is very respectable. Next slide. Then we get to see how he's pulled it off by quarter, and you can see the whopping $54 million profit in Q1. So in the last 4 quarters, we saw a little bit of a challenge in Q3, which was November, and in February, but in May, he knocks it out of the park with a profit of $54 million, which is even better than Q2 last year, which is the summer quarter, June, July, August. And so that's very impressive. Obviously, we're going to be asking Chris how he did it. I am personally very excited to see the next quarter come out, which is June, July, August, because that's the great summer quarter. And I don't know, I'm waiting with bated breath to see if Chris can do any better. I think that's my last slide in terms of our review of Cremi. So great results. It's great trading at $6.42, but it still has more legs, folks. I still think the stock could grow by another 5 to 10%. A lot will depend on how the next quarter turns out and whether this level of profitability is sustainable. But for sure, make no mistake, for the full year, the financial results were exceptional. Okay, so moving on to our questions. First question for me, if I could have that up on the screen, is what is causing the drive and demand for Cremi's products despite the economic downturn?
Well,
And forgive me, welcome again, Chris. Thanks for being on the program.
I appreciate it.
Yet again.
Cremi's an affordable brand with other entertainment options not available. Getting your family around to have some ice cream has been a popular option for the Jamaican people. It's something you can enjoy in smaller groups versus massive groups. And our delivery model, which I've said a number of times before, is the exact model you would have wanted for a situation like the pandemic, where the product's being taken into your area, into your house, into your community. You don't have to go far to get it.
Roughly in terms of distribution, Chris, how do you get that product out to people in terms of what percentage happens at the depots, maybe happens in the supermarkets, happens from delivery? When I say delivery, you know what I mean, your fudgies, etc.
Well,
how do you think of that distribution of your sales?
The depot feeds the fudgies and the house vendors, right? So that's the distribution model. That's the majority of our sales. Don't have the exact numbers. It's well over 80% of sales are through the depots. And they sell to the fudgies, the home vendors, and then sell to the consumer.
And then you do some distribution supermarkets, if I'm not mistaken.
Some distribution to supermarkets. That has also been going well for us. Really, we need to meet the demand is really the challenge. The demand is there. We need to be able to meet it. That's really been the challenge so far.
Okay, great. Thanks for that, Chris. Going on to my second question. What cost management strategies will be employed by the company going forward, as there was a 35% increase for the quarter ended May?
Well, the costs, we are looking at strategic ways in which to reduce certain costs, mainly utility costs. We have a project to install the combined heat and power plant. Expect that to have a significant return on investments, whereas reducing our utility costs. We've been going directly to market for our commodities, sugar, milk powder, and the such. And that has worked for us in the past. It's working for us now, but commodity prices all over the world on everything is going up. So, we face that challenge also. So it's going to be a significant challenge to try and rope in costs going forward. But,
Right. And I've seen that with quite a few distribution companies, no matter what they're doing, whether it's lumber, whether it's food, meats, we've just seen a significant increase in commodity prices, sometimes anywhere from 30 to 70%.
It's a very strange thing
Yes.
because like during the early stages of the pandemic, commodity prices were made flat. They didn't go up or down except for like a few that went down significantly. And now that parts of the world are beginning to open up, Canada, America, UK, demand for stuff is just going through the roof. But for the places that supply them, so these rich countries, their demand's going up, but then the countries that manufacture them are still dealing with the COVID situation, and that's just causing prices to go haywire, which I'm sure everybody out there is basically feeling every time they go to the supermarket now. For once, inflation is not being driven by like FX issues. It's being driven by like
Commodity
prices.
Which includes oil for the larger economy. Hey, PJ, I know you're still out there. I'm sure you must have a question or two as well for Christopher.
Hi, Chris.
Hi.
Could you tell us more about the property that was acquired on South Road?
Sure, we acquired a lot of land that's next to the factory. So we are 3 South Road, about 1 South Road. Right now, it's being used as we cleared off what was the old parking lot. We're going to put the CHP plant. So we've moved the parking lot to that area, as well as increased our water storage in that same space. We still have a lot more land to use, so we're thinking about other ways in which to utilize it, but that's what we're mainly using for now. You can think that we need it to make space for the CHP, even though the CHP is not on that land.
Right. And folks, for those out there, CHP is combined heat and power plant, so he's looking to produce his own energy, and you get free cooling and heating out of that. Again, I did 16 years in energy, so I know a thing or two about that. And we've seen clients who made that switch, industrial customers, saving their utility costs by 30 to 40%. So that's huge. Congratulations on making that move. We look forward to hearing the results of that. Chris, I think you have one more. PJ, I think you have one more question as well for Chris.
Yes, Dan. So we want to know if Creamy will be extending or increasing the number of depots that they have between now and the end of 2022.
Oh, the end of 2022.
Of the next year, maybe.
It's a little bit far out to speculate on the depots. Yeah. We don't have any targeted areas. We're very strategic in where we put the depots.
Yep.
They increase sales, but they also increase costs a lot.
Yes.
So we put them in areas in which we need either more attention, or if there's not a local person there that's not, that we think could be improved, maybe we'll put the depots there. But we don't have any plans to add any. We don't have any targeted areas right now.
Right. Well, I got one great idea for you, but I'll have to share that for you offline, and you may have to pay me to broker that deal, but I can think of one great location for you. Speaking of great locations, how's Ocho Rios been for you?
Ocho Rios has been great.
Excellent.
It's been, I would say it's performed above what I actually expected. It's been a great little feeder area to all the towns around it. And it's been one of those things that's been able to add to our ability to find the sales.
Excellent. So when we look at that 100% growth in sales this quarter over the same quarter last year, Ocho Rios must be featuring in that conversation.
A lot, yeah, for sure.
All right, great. Thanks for that, Chris. Really appreciate it. Again, folks, I still think this is a great company. I'm watching the next quarter's results. I really still think they have more legs in that stock price, despite having grown by 30%. And whenever you see us bring guests and bring them back on the show, you know it's because things are happening. Thanks so much for that, Chris. Moving on to the next stock review, I think PJ will be doing a review for us on Lumber Depot. Over to you, PJ.
Okay, Dan. So, Lumber Depot is a company that I am really excited about, really excited to share the information about their review while we look at their financials. So, it's a company which has taken the construction industry by storm ever since it listed on the junior market of the Jamaican Stock Exchange in December of 2019. Now, important to note, Lumber Depot Limited is a subsidiary of the Blue Power Group. The company has strategically positioned itself, firstly, to be a dominant force within the sector, and its geographic location has also aided that cause. It's located in Papine, and so it has a wide reach for the upper St. Andrew belt, where the majority of the residential construction is actually currently taking place, along with its surrounding environs. There has also been an influx of rural clients coming in to get their supplies from Lumber Depot. Although the company specializes in providing the widest range of lumber that you will find locally, which it sources from its four main partners across North America and Central America. The company has strategically launched its tentacles to cover another section of the market. So they have actually extended their inventory line where they currently provide over 2,000 different products. Lumber Depot not only caters to lumber, so they have steel supplies, cement, they provide plumbing and electrical supplies. So it's a one-stop shop for the contractor who is looking to get supplies for their construction developments. One of the most impressive feats of Lumber Depot to date is how they've managed to navigate all the challenges which they've faced since they have listed on the junior market of the stock exchange. Those main challenges being the onslaught of the COVID-19 pandemic, and secondly, having to compete with their competitors who are bigger in the market. However, despite those challenges, we have seen where Lumber Depot has traded positively since December of 2019. The business has also profited significantly from improved revenues, as well as the improved tax status that they enjoy being listed on the junior market of the stock exchange. So they have been doing well, and they have been taking steps to increase their productivity. And as a consequence of the strong performance that they have enjoyed, we have seen where they have increased their shareholders' equity by 68% from 192.2 million to $323.1 million. Now, interesting to note, Dan, and you'll see it on the slide that is up, the stock traded as low as $1.62 since January of this year. However, Dan, I can recall in April of this year, you made a very bold prediction on this forum. While the stock was trading at $2.42 in April, that the stock was going to move upwards to $4. When we look at the last price, which is listed on the slide, recorded at July 20th, which is yesterday, we see where lumber closed trading at $3.46, which means that the trajectory is upwards, not far from what Dan had recommended or predicted. So no doubt, given the company's strong performance and the resilience that they have shown, especially during the COVID-19 period, they have hit the $1 billion mark in revenue, posting $1.43 billion. And so we know that they will continue on a positive growth, even as the construction boom continues in Jamaica. We're almost there, Dan. Viewers, I can tell you whenever we give a prediction in this forum, you can trust and believe that it's going to happen. And that speaks to the wealth of knowledge and experience that you access at Mayberry, even through this forum. Now, the stock is currently trading at a PE ratio of 16.85 times, which is low when compared to the junior market PE average of 21.4 times. Stock is currently undervalued, a book value of 7.5 times the current price. So definitely it is a stock that you want to consider if you want to see capital gains on your portfolio. Looking at some other results, we see where they increased their shareholders' equity by 68%, as we said before, Total assets increased by 41% and total liabilities 12%. Revenue increased by 55%, as I said before. They posted 1.4 billion, which is an increase from the previous financial year ending April 2020 at $921 million. The earnings per share has also increased significantly since April 2020 of last year. So they have increased to 21 cents earnings per share, which is a 554% increase. And that speaks to the growth and expansion that we're seeing with Lumber Depot, even as they trade on the junior market, which we have to factor in. Now, Lumber Depot has taken an approach where, although they do not compete in a similar manner with their competitors by offering credit arrangements with their clients, what they do is that they negotiate with their clients to ensure that they get the supplies, they meet the demand, and they secure their sales. For Lumber Depot, cash is king, and that is very important, even as they seek to expand within the construction industry. They've also indicated that their turnaround on inventory does not exceed a 2-month period, and that's a serious turnover on inventory, which is something that you have to look at in a company that has to meet rapidly increasing demands. Moving on to the next slide. This slide shows the quarterly profit movements for the company, but specifically we will look at Q4 for the financial year ending April 2020 and compare it to Q4 for the financial year ending April 2021. So they reported a net loss of 15.3 million for Q4 April 2020. And we saw a massive turnover for the financial year ended April 2021 of $64.1 million. In April of this year, the managing director of Lumber Depot indicated that the company is currently engaging to partner with key stakeholders as they seek to expand their business. They're also eyeing acquisitions and other partnerships that will allow them along this path. We are also aware of the fact that Lumber Depot currently is looking to expand their warehouse so that they can have more inventory coming in to meet the growing demand that is out there for their products. So if you're looking to find a stock that is going to help to expand your portfolio, we see Lumber Depot as a growth stock. And if you don't have it already, don't be afraid, pick up the phone, contact Mayberry Investments Limited tomorrow. You can get in touch with a sales advisor through our head of sales, Okelia Paradon, or reach out directly to me and we will help you. Mayberry's mandate is to help you to reach your financial goals. Over to you, Dan.
Thanks, Chris. I appreciate that. I couldn't agree more. Lumber Depot is definitely headed for $4 PJ, in my view. Definitely headed for $4. In fact, I'm going to say $4.11 because at today's 12-month trailing earnings of $145 million at a 20-time PE, that's a $4.11 stock price, and junior market average is 21 times. So great company. We did have Major Noel Dawes on the program a few weeks ago. Major, I know you're watching. We were waiting on the audited results, PJ. I mean, they've done better than I expected, quite frankly. We were guessing maybe 40 million for the quarter. They did over 60 million. And so I really hope they can keep up that run rate. And I have no doubt the stock has got a lot more legs to go on it. Thanks for that. Before we get into our next review of JMMB, I'd like to take this moment to remind you that if you're seeking to expand your investment portfolio or embark on your very first investment journey, Mayberry can guide you in achieving your financial goals. Follow us on social media and make sure to visit our website at www.mayberry.inv.com. Now on to JMMB, our third stock pick of the week. And anyone can pick stocks after the fact and come back and say, oh, this stock grew by 20% or 30% or 40%. Here are 3 stocks, folks, that we told you about earlier this year, and I'm coming back to remind you that we told you about them. And some are up 100%, some are up 30%. In this case, JMMB is up over 23% from when we recommended it end of January 2020, January 27 this year, when the stock price was at $31 dollars and the PE was less than 10 times. And I said, this just didn't make sense. Why should JMMB be trading at a 10 times PE? And that was when their trailing earnings was a bit lower. So here it is. We've seen their results come out. Their trailing earnings are now at $7.5 billion. Stock price has increased by 23% to $38.54. But because of the growth in earnings, the PE is still at 10 times. So I'm here to tell you that there's no reason why JMMB should still be trading this low at a 10 times PE when its competitors include folks like Sagicor Jamaica that trades at 14 times and is at $53. Scotiabank, which trades at 13 times, is at $40 approximately. And even NCB, which trades at a whopping 22 times at $140. This makes no sense to me. JMMB is just as solid a company, and I think the stock should be trading at a minimum of 12 times. At 12 times, that means the stock price will grow by a further 20% to 46 times. And in fact, it could get up to 14 times, folks, which would be $54, or a further 40% growth. So this is the easiest way to invest and make 20 to 40% over the next 12 to 18 months. JMMB is that great a company. We had Keith Duncan last year, and I'm sure we're going to have him back in a couple of months to talk about the exceptional job they've been doing. On the next slide, just to show you the results, again, doesn't look spectacular at first glance. They grew their top-line revenue by 7%, up to $34 billion. They increased their operating profit to $8 billion, 43%, but the net profit only grew by 9% to $7.78 billion. But what you have to pay attention to really here is the growth in the total assets and the equity. The growth in equity is 48%, approximately $20 billion, and that's because you don't really see the growth in the other comprehensive income just looking at the P&L. You definitely have to dig a little bit deeper to try to appreciate, okay, how did they grow their balance sheet by $20 billion when they only made a $7 billion profit? And we'll discover that when we jump onto the next slide and start to do a deep dive and look for things like the OCI. Here, again, just showing a breakout pictorially of the revenues to profit, again, ending with a $7.7 billion profit. On the next slide, we look at how that profit has moved quarter over quarter, and you can see in both years they finished strong in their fourth quarter this year with a whopping $3.6 billion profit in the last quarter alone, which is 20% better than last year quarter same time, but significantly better than the last two quarters. I mean, this is just impressive what they've managed to do in this last quarter. On the next slide, I want to talk a little bit about the other comprehensive income, or total comprehensive income. Last year's total comprehensive income was actually negative at $1.2 billion. And what happened there is they have some bonds that they mark to market but carried through OCI and not through the P&L. And last year they actually had a $6 billion loss on the mark-to-market of those bonds. And this year things have turned around, and they have instead a $14 billion gain on the same bonds that they mark through OCI. So when you put the $7 billion profit together with the $14 billion gain roughly on the bonds, you see an overall $20 billion contribution through other comprehensive income, which flows into the retained earnings and the total equity. And this shows you the strength of JMMB, growing their balance sheet by $20 billion, returning a profit of $7 billion. What's interesting, in the COVID environment, you could see that they tightened up the belt a little bit. So dividends are down from $870 million last year to $480 million in the last 12 months. So dividends, they tighten up the belt by about $400 million. I expect going forward that we're going to see them turn around and step up the dividend payments. So here's a company that not only can you invest in and probably get a 20 to 40% capital gain over the next 12 to 18 months, my prediction, but they're likely to pay $800 million in dividends over the next 12 to 18 months as well. So it will be also a great dividend-paying company. PJ, any thoughts or comments from you about JMMB?
Yeah, well, Dan, I totally agree with you. I think JMMB is one of those companies that really sell themselves. They have always taken strategies and measures to acutely manage capital, liquidity, and expenses, and their strategies have always yielded success. I'm also impressed with the revenue diversification strategies that they have employed, and they have seek to increase their loan portfolio, and customer deposits have also increased 17 and 16% respectively. Now, important to note, JMMB traded close to the $50 region just before the onset of the COVID pandemic in Jamaica. And we do anticipate that as they beef up their operations, we will see the stock trending upwards. So this is also a stock, as Dan said, I totally agree with him, that should be included in your portfolio if it is that you're looking for capital gains. And in addition to that, we do know that they always seek to reward their clients with dividends. So JMMB is definitely one of our picks, and we encourage investors or prospective investors to look at JMMB as a stock to include in your portfolio.
Great, thanks for that. Thanks for that, PJ. And again, folks, if you have any questions out there in social media, don't hesitate to send them in, whether it's on Creamy, Lumber Depot, or JMMB. We're happy to have a dialogue if necessary. Moving on to our next segment, we'd like to look at our gainers and decliners for the week. Great, starting with our top decliners. First, we have SSLVC, Kingston Living Entertainment, Mayberry Investments. I'm sure that'll change next week. Cremi down 5%. I'm sure that's going to change next week, Chris. Blue Power down 5%. And moving on to our top gainers, Purity up 17%. PJX up 11%, Portland. Trans Jamaica Highway up 11%. First Rock up roughly 8%. And Berger also up 8.7%. Good deal. PJ, any surprises for you there in terms of gainers or decliners? Anything jump up?
Well, I do know without a shadow of a doubt that there will be some changes with MIL's price come next week. But outside of that, we do observe the changes that are taking place in the market. But fundamentally, the companies that are strong always recover. And that's something that we expect our investors to also consider when they're looking for companies to invest in, which is why we gave these recommendations today. But outside no real surprises, we do know that markets have peaks and troughs, but slow and steady wins the race, and the patient investor always wins.
Absolutely. And this last year in particular has been very challenging for some of our clientele who I think grew a little impatient throughout the COVID environment when the market was down, approximately 30% last year. I had quite a bit of clients panicking and calling and, hey, what should we do? And I remember JMMB is a perfect example, right? This company had an APO raised over $12 billion at $38. It had traded at a high at $54. And I remember saying to folks, what has changed about JMMB? Has your view about the company changed? Because mine certainly hasn't. So yes, it's down at $32, but I have no doubt that it's going to bounce back and bounce back strong. And here we are today. It's at $38. And again, I have no doubt we're going to come back here next year, and that stock's going to be closer to $50. Their results will have grown even further because the fundamentals have not changed for JMMB and for quite a few of our other clients. In fact, MJE, I think, is a reflection of the market. Our portfolio was at $17 billion before COVID, fell to a low of $11 billion. And in the last quarter, we're back up to $17 billion. And I think the MJE portfolio still has a lot of growth potential in it. And so, my story to folks is we do show the weekly gains and decliners, but this journey is something you have to think in terms of years. And I like to think a year ahead of time, set myself a growth target, and focus on my portfolio over the long run. So yes, I lost 25% last year, but the last 4 years running, I'm up 180%. So I'm not going to panic when I have one bad year. And in this year, we're already up by approximately 28%, and we still have 5 months to go in the year. And we see companies like Creamy and Lumber Depot and JMMB just knocking it out of the park. Well, folks, it was a short run today. Chris, really appreciate having you come in to represent for Creamy. I'll be talking about Creamy in another 3 months when those results come out. PJ, thanks so much for assisting us again. Folks, we apologize for the absence of Chairman Berry and Gary Parrott. I'd like to thank all of our viewers for tuning in today. I'd also like to thank our co-host and our in-person guests for participating in today's investor briefing. We're certainly looking forward to continuing our Investor Forum series next week as we have an investor update on Kingston Wharfs Limited, major company. Mayberry Investment Limited team truly appreciates the support we get from you guys each week, and we encourage you to share your thoughts on our virtual forums. What topic or investor update would you like for us to feature? Can you DM us via Instagram at Mayberry INV Jamaica or on other social media pages? You should see their handles pop up on the screen now. Be sure to follow us on social media to stay up to date with our live streams, and don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you to all our viewers for tuning in today. Keep safe, and remember, as PJ just said, slow and steady wins the race. Goodbye. You can, boom.